You're listening to Nora and Noah Decode the Day, where markets meet meaning every morning.
Welcome to the Deep Dive. Today we're tackling Alphabet's latest earnings report. You sent this over wanting to really get under the hood of these numbers.
Yeah, figure out what they actually mean, what's driving them.
Exactly. So our goal is to cut through the jargon, find the key insights, maybe some surprising bits, and, what it all signals about the tech landscape.
Which is always changing, right?
Always. We'll look at the core businesses, how they're doing, what role AI is playing the real role, and maybe what it tells us about the bigger economy and the competition in tech.
Right. And we've got this Bloomberg article as our main guide here. It breaks down Alphabet's Q1 earnings.
Okay.
So we'll be digging into revenue, profit, how Search and Cloud and YouTube did, and also some of those less obvious details like investments, maybe potential legal issues down the road.
Okay, let's dive right in then. The immediate headline seems to be, well, Alphabet didn't just meet expectations. They kind of blew past them.
Yeah, they really did.
We're talking, $76.5 billion in revenue. Analysts were looking for $75.4 billion.
Yeah.
And net income per share, $2.81 versus a forecast around $2.91. That's a pretty big beat, isn't it?
It is. It really is. And what's interesting is how the market reacted.
Right, because the stock had been down quite a bit this year.
Yeah, down 16% year to date before this came out.
Wow.
But then, boom, it jumps over 5% in extended trading.
Okay.
That's the trading after the main market closes. So it really suggests the market was maybe braced for something weaker.
Yeah, maybe some pessimism baked in. And this was a positive surprise.
Exactly.
Okay, so here's where it gets, really interesting for me. The core business, search advertising, still just incredibly strong.
The engine.
Right. It brought in $50.7 billion. Again, a little bit more than analysts expected.
Just a hair over, yeah. $50.3 billion was the expectation.
What strikes you about that? Just the continued strength there?
Well, the resilience, I think.
Yeah.
Especially given, the broader economic noise we sometimes hear.
Mm-hmm.
Executives specifically pointed out good performance in, like, insurance, retail, healthcare, travel. So that suggests that even if things are a bit uncertain, businesses in those key areas are still finding Google search ads really effective. They're still spending.
I saw a comment, I think it was from Oyer Wormser, an analyst.
Mm-hmm.
He mentioned being a bit surprised by how strong the retailer ad spend was.
Yeah.
It makes you wonder, what's behind that? Is it like a shift in how people are shopping? Or is Google just getting better at targeting for retailers?
That's a really good question. It could definitely be a mix of things.
Yeah.
I mean, consumer behavior is definitely still shifting post-pandemic, and it's very likely Google's ad tools are just, getting smarter, allowing retailers to find the right shoppers.
Makes the spend worthwhile, even if budgets are tighter elsewhere.
Precisely.
Okay, let's shift gears a bit. Google Cloud.
Right.
Sales slightly missed the mark, but the operating profit was actually better than expected. What's that telling us?
Well, it suggests they're getting more efficient, doesn't it? They might not have grown the top line quite as much as hoped, but they're making more money from the business they have.
So better margins.
Better margins, yeah. Could be either focusing on, higher value clients, or maybe they've just gotten better at managing their infrastructure costs, optimizing things.
That makes sense. And connecting this to something else in the article, the AI boom is actually helping Google Cloud.
Oh, absolutely.
All these AI startups, they need massive computing power, right? And they're turning to cloud providers like Google.
Yep. So Alphabet's huge AI investments are kind of paying off twice.
How so?
Well, they need the infrastructure for their own AI stuff, obviously.
Right.
But that same infrastructure is attracting this whole new wave of cloud customers who are also pushing AI forward.
Huh. Interesting synergy.
And get this, for the second quarter straight, demand for Google Cloud actually outstripped their data center capacity.
Wow. Really?
Yeah, that screams strong growth, but also, the need to keep building out, keep investing.
Which leads us neatly into the whole AI race discussion. It's there. The article notes Alphabet's big AI push is driven by, competition. They need to answer those popular AI chatbots, the ones people see as maybe alternatives to traditional search.
Yeah, it puts the spending into context, right? They sort of have to do it to stay ahead or even just keep pace.
And we're seeing the first results, like AI overviews in search.
Right, but the article called their success mixed so far.
Yeah, and it mentioned something potentially controversial.
Yeah.
That these features have reportedly decimated traffic to independent websites.
Oof. Yeah, that's a big one. That feels really significant.
It does. What are the sort of long-term implications if that trend continues?
Well, it makes you wonder about the whole web ecosystem, doesn't it?
Yeah.
If Google's AI gives you the answer directly, why click through to the original source?
And what happens to those sources? The independent creators, the publishers.
The diversity of voices online, there's a real tension there, isn't there, between user convenience, getting a quick answer, and the, let's say, health of the broader internet.
Absolutely. Finding that balance.
Yeah.
It's going to be tricky. How do you support original content if you're also summarizing it away?
It's a huge question. Really important stuff.
Okay, now for something completely different. A real curveball in the report. An $8 billion unrealized gain from an investment in a private company.
Right.
Which turned out to be Elon Musk's SpaceX.
Yeah. That was definitely a surprise, buried in the numbers.
So an unrealized gain, just quickly, what does that mean exactly?
It basically means the value of Alphabet's investment in SpaceX has gone up a lot, on paper at least.
Okay.
But they haven't sold their shares yet, so the profit isn't realized or locked in.
Got it.
But the size of that gain, $8 billion, that's massive. It just shows how Alphabet's bets go way beyond their core tech stuff.
And they can pay off big time.
Exactly. And the article reminds us, Google has actually been a SpaceX investor for a while, since at least 2015 with Fidelity.
Right. Okay, moving over to YouTube.
Okay.
Revenue there slightly missed estimates. Is that anything to worry about?
Well, slightly missed, yeah. $8.92 billion versus $8.94 billion expected, so very close.
Okay.
But you got to look at the other signs, too.
Yeah.
The article highlights YouTube's podcasting push. Apparently, it's seeing huge traction.
Oh, yeah?
1 billion monthly viewers for podcasts. That's more than Spotify or Apple, according to the article.
1 billion. Wow. That's huge.
It really is. It shows a very successful expansion, a diversification within YouTube. Plus, they're seeing growth in both ad revenue and subscriptions, like YouTube Premium.
Okay, so maybe that slight revenue miss isn't the whole story for YouTube.
Yeah.
The podcast number is really something.
Yeah, it shows they're evolving beyond just, traditional video.
Definitely. Now, we also need to touch on the legal side of things.
The elephant in the room, maybe?
Kind of. Federal judges have ruled that Google has illegal monopolies in search and some ad tech areas. That feels like a pretty big shadow, regardless of the good earnings.
It's a very significant headwind, yeah. And there's a hearing happening right now, apparently, to figure out the remedies.
Remedies meaning how to fix it, how to restore competition.
Exactly. And that just creates a layer of uncertainty, doesn't it, about how Google might have to operate in the future.
For sure. The outcome of that could really reshape things.
Absolutely critical point. It could have a substantial impact down the line.
Okay, but on a more positive note, at least for investors, Alphabet announced a huge share buyback, $70 billion.
And they boosted the dividend, too.
Right, up 5% to 21 cents a share. What's the signal they're sending with moves like that?
Well, typically it signals confidence. Confidence in their future finances, their future profits.
Okay.
And it's a commitment to return cash to shareholders. Plus, buybacks can help boost the earnings per share number, which the market usually likes.
Right, makes sense. Okay, so finally, let's step back. Look at the bigger picture. The article suggests this strong report from Alphabet kind of sets a high bar, puts a bit of pressure on its peers, like Meta and Amazon. Their earnings are coming up soon.
That's right. Investors will be watching those super closely now.
To see if this is like an Alphabet-specific strength or if the whole digital ad market is maybe stronger than feared.
Exactly. Is the tide lifting all boats, or is Alphabet just sailing particularly well? Plus, everyone's watching for any signs of impact from, global economics, trade tensions, all that stuff on these big tech giants.
So for you listening, what's the takeaway here? Alphabet's earnings, they paint a picture of a company navigating, well, a really complex environment.
Yeah, showing real strength in that core search business still.
Definitely. And significant growth in cloud, which is being fueled by AI.
And then these kind of unexpected boosts like the SpaceX investment gain.
But at the same time, as we talked about, they're dealing with this fast-changing AI search world.
Which has tricky implications for the web.
And facing these really significant ongoing legal battles over antitrust.
It's a real tightrope walk, isn't it, for these tech giants?
Constantly needing to innovate, hold on to their market share, deliver the financial results.
All while regulators are watching closely and the technology is shifting under their feet.
Yeah. It really makes you think about, well, the huge impact AI is having on how we get information.
And that delicate balance of the whole internet ecosystem we discussed.
And of course, how might those antitrust fights eventually change the game?
Yeah, how different could the competitive landscape look in a few years?
So yeah,
Yeah.
Alphabet's report, it's a snapshot of a tech giant at a really pivotal moment. Things look strong now.
But the future, it'll really depend on how they navigate AI responsibly and how they handle that evolving regulatory world. Leaves you with a lot to chew on, really.
That's it for today's Decode. If you found this helpful, make sure to subscribe, and we'll catch you tomorrow, right here on Nora and Noah Decode the Day.